Hello, this is Joe from PrepAgent, and I am here today with Carol, a new student getting ready to pass a real estate exam. Hello, Carol.
Hi, Joe.
How you doing?
Pretty good.
Not as good as you say you are because you're a little nervous. You called me a little bit of panic, right?
Well, yeah, exactly. This isn't the most fun stuff in the world, but I got to do it.
You got to do it, but we'll make it a little less painless, and we're going to focus on a topic that was giving you a little trouble. And what topic is that?
Um, the real estate exam.
The secondary market.
Yeah, I know.
Yes, don't worry about it. I know the whole exam can be daunting, but we were talking about the secondary market before.
Okay.
And a lot of people do because when you study other stuff like appraisal, it's much more tangible. You see the properties, the definition is a little simpler. Secondary market's very ambiguous to people. It's not something your average person comes across. So it's a little harder for people to wrap their head around. But we're going to try and make it a little more manageable for you today. So when you move forward, it's less daunting on your real estate exam.
Okay, I appreciate it. Thanks.
Yeah, no worries. And let's narrow down our points of trouble from real estate exam to more specific things. What do you think?
Okay.
Okay. So first piece of advice I give everybody, don't overthink stuff. Remember, my motto, smart is overrated. You don't want to overthink everything. Keep it simple. Keep it easy. Keep it concise. You could get very involved with the secondary market, but there's just a few simple things you need to know. And it all starts with this. The secondary market is the resale marketplace of loans. Can you read that back to me?
The secondary market is the real resale market of loans.
Do you know what that means?
Not really.
Doesn't matter. If you see that, circle it on your exam.
Okay?
Even if you don't know what it means, just circle it. Because
Okay.
that is the core of it. Now I'm going to explain a little bit of what it means, but this is the core of everything. So remember it like it's Greek or whatever language you don't know. The secondary market is the resale marketplace of loans.
Okay.
Are you a history buff?
In some areas.
Okay, so sometimes knowing the history of something will really help explain the concepts. So let me take you back to 1934. Tell me what you know about 1934.
The Great Depression.
There you go. You're on a roll. Great Depression.
Yeah.
What do you think? Now, you obviously don't know this much detail, but you're a smart person. What do you think real estate-wise was going on during the Great Depression?
My guess would be hard times, deflation.
Okay. So, really, it was a society full of renters. And what I mean by that, only the very rich could own property. So most of the society had to rent. And as you go into real estate, you know that to build wealth, you want to own property. So it's a classic case of the rich getting richer and the poor struggling to keep up. Because as we know, poverty could be like quicksand. And part of that is paying exorbitant rents, trying to keep up where you're not getting any money back through equity building and the appreciation of the property. So that was part of the problem with Great Depression. Let me get a little more specific. Back then, to get a property, you had to put down 20 to 40% on the property. 20 to 40%. That's a lot of money. If you think about terms today, we don't put nearly that amount down on a property.
True. Yeah.
And the loan amount was 7 years. So it was a 7-year loan, and it was a straight note. Okay? Meaning you only paid the interest. 7-year loan. So if you think about it, what's the issue with that?
The issue is most people can't afford it.
Yeah, so most poor people can't afford to put 20, 40% down. Even today, that wouldn't be realistic.
Yeah, I wouldn't be able to do it either.
Yes. Okay, so 20 to 40% was a large down payment. And in 7 years, the bank would have the money back. So what does that mean? That means the bank had money to lend out over and over again. Because remember, they were getting 20 to 40% down, and the loans were being repaid back after 7 years.
Okay.
So it worked for the banks. They could keep lending to the rich people who could afford to take out the loans, but the lower class and the poor was left out. This made things a lot worse, and it helped attribute to the Great Depression. So what happened was in 1934, okay, so you had 1930, 31, 32. Remember Shirley Temple? You were a big fan of hers, right?
Yeah, she's cute.
Yes, 1930s. 1934, something happened in the real estate world. Very exciting. You know what it was?
No,
Something called the FHA. You ever heard of the FHA?
I certainly have.
Yes, it's probably something you saw in your books, but you were like, what's that about? I've heard of it, but I don't exactly know what it is.
Okay.
So what the FHA did is they stepped in. And this is a government organization that said, we got to do something about this. It's getting out of control. Depression's going crazy. So what the FHA did is they decided to insure the lenders from loss. They told the lenders, hey, instead of doing this 7-year and 20 to 40%, why don't we do something more reasonable like 3%? And why don't we do it over the course of, I don't know, 30 years, which is more what you see today, that 30-year loan. The banks were like, well, that's crazy. We don't have money to lend out. And what if people default? And FHA said, no worries, we will insure you from loss. So if anything happens, we got you covered. But in doing that, a new problem arose. What do you think? So now banks were collecting, so you wanted to get a house. You gave me 3%, and you were going to pay me back over 30 years.
Okay.
Where it used to be, I would get the money over a 7-year period. So what's the issue for me now as the lender?
Whether in the Great Depression I keep a job for that amount of time and consistently pay?
Well, that's where the FHA said they would help. But
Okay.
there's another issue here for me as the bank as a business. Remember, before I was getting 20 to 40% down payments, and I was getting all my money back in 7 years.
Yeah.
So when the next guy wanted to borrow money, wasn't an issue for me. Now I'm lending money to people who aren't paying me back in 30 years. So what's my issue?
Having enough to loan.
Exactly. There you go. So now I don't have the money to lend out to the next guy. So my business model is kind of screwed by this.
Yeah.
So the FHA, right, insured the lenders from loss. Now, keep note, FHA is not a lender. They just insure the lenders from loss. But what this did is created a situation where I lost capital. I don't have capital to lend out to new people. Does that make sense?
Yeah, it does.
Okay. So this is where the secondary market came in. The secondary market's the resale marketplace. They would buy those loans from the FHA, okay, or buy those FHA insured loans, I should say that correctly, resell them, and now the lenders have the capital to lend money.
Okay.
Does that make sense?
Makes sense.
And now you know why, when I started this lesson, I said think of it as the resale marketplace.
Okay.
So essentially, I could lend you money, and I need the money back, so I'll resell that loan to the secondary market. They could wait to make money over a longer period of time, over 30 years, in the complexities of the stock market. They buy it, and now I have the money to lend out to new people. Sound good?
Yep.
Now, the FHA insured the lenders from loss, and the FHA made it a very desirable loan to resell in the secondary market as insured, but to do that, they had to verify the borrower's employment, have the property appraised by a neutral third party, and have a title search, which shows the history of ownership.
Okay.
Borrowers charge a one-time upfront insurance premium, and if the borrower defaulted, the FHA would pay the difference. Key point here, FHA does not make loans. You don't go to an FHA office to get a loan. There's no such thing. FHA is an insurance place for lenders.
Okay.
Okay, so I hope part of this background puts it a little more in context for you to
It does.
understand the secondary market.
Yeah.
Okay, in 1939, Fannie Mae bought FHA insured loans from lenders. This is a government institution. And you ever heard of the VA?
Yeah.
What's the VA?
Veterans Association.
Yeah, so when the veterans returned from war in 1935, Fannie and Mae agreed to buy VA guaranteed loans that the lender had negotiated. Fannie Mae buys mortgages on the secondary market, pulls them together, then sells them back as mortgage securities to investors on the open market. That's a little more complicated way of saying what I was saying before, how they take the loans, they create them, sell them on the secondary market, and then they have the capital in order to make more loans. Okay?
Yeah, I get it.
You're going to hear a term called warehousing. Have you heard this term before?
No.
Warehousing is when they package the loans and sell them in a group. Kind of like when you buy a 6-pack of soda. What's cheaper, buying a 6-pack of soda or buying 6 individual sodas?
6-pack.
Right. So warehousing is like a 6-pack of sodas.
Okay.
Okay? And they sell them on the secondary market. They package the loans and they sell them all as one. Ginnie Mae is a federally owned corporation in the Department of Housing and Urban Development, and they ensure liquidity. Do you know what the word liquidity means?
I think in terms of if you liquefy whatever you own, what it's worth.
Yeah, it's basically turns things into cash.
Right.
It makes the money more movable. Just think of the word liquid. What does liquid mean to you when you think of the word liquid?
Flow.
Flow. Exactly. It moves easily. So when you think of liquidity for money, just think of it like liquid. It flows easily. It can be easily moved. In summary, secondary market resells loans to which help provides fund for lenders. Oh my gosh, please excuse my spelling error. Everybody who sees this, you do not spell resell with an L in there.
Okay.
So, disclosure, I've identified my error. So won't put all the comments on YouTube, please. Carol, do you see any other errors here so people don't trash me on YouTube?
Let's see. Secondary market resells loans to which helps provide funds for lenders. You can put a period on the end, but on that we're okay.
See how smart I am? You think I misspell, but really I just made you reread that sentence for everybody watching this on YouTube.
Okay.
See, that was all pre-thought. So, haha, everybody on YouTube land. Okay. Here's your favorite part. Questions. Dun 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 dun. So, unfortunately, we're going to expose your weakness, but I want to congratulate you because by you exposing your weaknesses, you're helping a lot of people, including myself as a teacher and other people trying to learn. And I'll do these questions with you, so I'll help explain concepts as we're working on them.
Okay.
All right, so just do your best, and don't be afraid to get it wrong, because rather get it wrong now than on your exam.
Fair enough.
All right, why don't you read this out loud?
In which of the following markets may a lender sell a loan that a mortgage banker has previously originated? Secondary market.
Look at you, you're already doing well. 100%. Okay, why'd you circle secondary market?
Because that's what we've been talking about.
And what I'm getting at, and I'll say this a lot as you prepare for your exam, if something's familiar to you, circle it. Do never circle things that you've never heard of before. Because if you study a lot for this exam, you're going to see things that become familiar. If something in your exam you've never seen before, that means it's not in your material, you don't need to know it, don't circle it. Okay?
Okay.
Okay, in which of the following markets may a lender sell a loan that a mortgage banker has previously originated? What's the answer?
Secondary market.
Boom. Okay, great. A VA loan may be granted for the purchase of a 1 to 4 family Okay. Okay, a VA loan may be granted for the purchase of a 1 family to 4 family property if, what do you think?
The down payment will be at least 10%.
Nope. So the answer here is the veteran agrees to live there. We did not talk about that in the lesson, so don't feel bad.
That's true, we didn't, I guessed.
Right, so don't feel bad about getting that wrong.
Okay.
What I want you to learn from this is You're getting tested primarily on residential real estate.
Okay.
So remember that. People live in residential real estate. The
Okay.
VA insures loans, but they're not insuring loans so people can make money. They're insuring loans so people have a place to live. It's making sure veterans have a home, not making sure veterans can get nice income properties and things of that nature.
Okay. All right.
That's why I
Thanks.
default to answers on your exam will usually revolve around people's residence, not collecting rent or things of that nature. Now, that's not always the case, but it's a good rule of thumb to follow as you prepare.
Okay, I'll remember that.
Okay, so with that being said, what's the answer here? Going off what I just explained to you. Which of the following loans would be most likely to qualify for FHA insurance?
It would be a loan to purchase 1 to 4 units of residential rental property.
Right, and what we're getting at here, we didn't talk about a lot about that, but going off that rule of thumb I just gave you, you're saying, I'm not sure here, but going off that rule of thumb about residential real estate, there it is.
That's exactly what I did.
Yeah, and so that'll really help you as you prepare for your exam. Which of the following statement is most accurate concerning mortgage bankers?
They negotiate loans which are readily saleable in the secondary mortgage market.
You just got another one right. I want you to remember, you said you knew nothing when you started this lesson.
True.
It's either I'm a great teacher or you need more confidence. Let's go with both.
Okay.
Lenders who deal directly with the borrowers make up the, what do you think?
Probably be the primary mortgage market.
I love that you got that right. You didn't automatically circle secondary market because you paid attention and you said secondary market is the resale marketplace. So that's not dealing directly with borrowers. So the primary mortgage market is the answer there.
That's exactly how I thought.
Excellent. What you're also learning is in order to pass this exam, if you know a few simple rules of thumb and you know some key words and know some key concepts, you could get by and you'll be okay. So as we started with you when we started this lesson, there's a feeling of insecurity. And my hope as you're doing this, you get a little more confidence saying, I can handle this if I just understand some important concepts that are relevant to what we're doing here. Which of the following loans on a home would probably be made without requiring a down payment from the borrower?
VA.
I don't know how you got that right, but you did. VA, that's one of those you just got to learn. VA does not require a down payment. Just out of curiosity, I did not say that in the lesson. How did you come up with VA? What was your thought process?
Well, you were talking about the previous question, and the that the idea was just to give someone a residence, and we were talking about veterans. So in a way, it was an educated guess that this would apply to the veterans.
Excellent. Good. So the other thing you see is GNMA is Ginnie Mae. We learned before they buy things on the secondary market, right?
Okay, yeah.
Conventional, we haven't heard that word. We didn't mention that today. FHA you learned about.
Right.
So, and remember I said FHA needed a small down payment. I told you that story how originally it was 20-40%. I didn't say FHA said no down payment. I said it was a much smaller down payment.
Okay.
And so you came up with VA.
Right.
Primary activities of Fannie Mae in the secondary market involves which one?
FHA loans only?
Government insured and guaranteed loans, which FHA is one of.
All right.
Just for the record, if this was your exam, you are passing your exam so far.
Okay.
You like that little animation there?
Yeah.
Fannie Mae, the Federal National Mortgage Association, was primarily created to. What do you think?
Let's see. It would be it would either be A or C. So increase the availability of secondary financing or serve as a secondary mortgage market. I think I'm going to go with A.
You're so close. Increase the
Okay.
availability of secondary financing. That
Yeah.
would increase the people, like on the stock market's ability to buy things. There's nothing to do with them.
Okay.
So it serves as a secondary market. But your thinking was
Okay.
great.
Right. The key word was mortgage market. Okay. Got it. I see where I messed up.
All the following are considered advantages of FHA except.
Um, the let's see. The buyer is protected with FHA insurance
You were doing awesome. Why'd you answer that one?
because it's the lender that's protected by the FHA
I
insurance.
am so impressed with you. That is great. And you swear, when we started this, you said you knew nothing about the secondary market, correct?
Correct.
Well, you're killing it. Purchaser of a home 5 years ago is now interested in securing an FHA loan. A salesperson will most likely introduce the homeowner to.
Um, A conventional bank or savings and loan.
Right again. Because remember, the FHA is not a lender. An
Right.
appraiser, doesn't make loans.
Right.
And what's the Federal Home Loan Bank?
I don't know.
Then don't circle it.
That's
Excellent.
exactly how I got that answer.
You are going to be a real estate licensed professional without knowing anything about this stuff. Great. Term mortgage warehousing refers to what?
Let's see. Oh, I think it's either A or B. Let's see. I'm going to go with B, selling loans.
Yep. Secondary mortgage market is the market in which promissory notes are exchanged. Which of the following is not considered a major player in the secondary mortgage market?
Sally Mae.
Great.
We haven't heard that name before, that's why.
Rules of thumb. So you're part learning new information and you're part learning test-taking techniques here as well.
Yes, exactly.
Who would be responsible for paying the 1% origination fee on an FHA loan?
C, the buyer.
Yep. What's your goal? To learn or pass?
To pass.
Pass. Yes, learning's lame. Learning later.
Well, learning
Pass
will
now.
come from experience. That's when it really sticks.
Yes. I mean, obviously, do I want people to learn? Of course I do. I'm just kind of joking with that. But really, we want to get past the exam. And you were doing such a great job of saying, you know what, I don't really know this stuff, but there's a few key things that if I understand, I'm going to pass without really having an in-depth knowledge of this material. And you're really doing well with that. Do I want you to have in-depth knowledge? Obviously I do. But that may not be realistic before your exam.
Yeah, that will come organically with the first year experience.
Yes, exactly. Borrower bought a $74,000 house with no down payment. The loan was probably what?
A VA loan.
Done. Going with logic here, you'd say, out of this group, who is the most likely to earn a no down payment loan? A veteran.
Exactly.
Yes. When purchasing with the FHA financing, a new buyer would normally do each of the following except what?
C.
Ooh, apply to a local FHA office. Remember, the buyers don't go there.
Okay.
All right. That one I think you just answered too quickly. A correct statement about the Federal National Mortgage Association is that it is... What do you think?
Okay. That it provides guarantees to lenders on certain mortgages. No, purchases certain mortgages originated by lending institutions. Right.
Yeah.
That one I went with for the answer before I read all of them, and then when I read the fourth one, I realized it fit more.
Yeah, no worries.
Okay.
The term warehousing and used in real estate financing means what?
A mortgage company collecting loans prior to resale.
Excellent. Do you remember my soda example?
Yes, I did.
FHA was primarily created for what reason? To provide what?
Let's see. Insurance for home loans made by approved lenders.
Killing it. Doing so good. Ugh, reading. Which statement best describes a VA loan?
Okay, you got to give me a minute to read this.
Well, if you skim through it, there's
Okay.
certain things that just stick out.
All right, I am right now.
So what sticks out to you if you skim through it really quickly?
It would be D. A loan funded through the U.S. Department of Veterans Affairs for qualified veteran on approved properties.
Okay. So it was one of two. It was either A or D.
Yeah.
What should have, when I was saying skim through it, is veterans. The other two didn't even have veterans as part of the answer. VA loan is clearly for veterans. So
Right.
you should have narrowed it down to A and D. You went with D. A is correct, but your thinking was in the right path.
Right, and I didn't actually get to that when I was skimming. I did not get to with no down payment required, or I would have picked. A.
Excellent. Good.
Okay.
You should get this really quickly, because I think I actually asked this one before.
Okay. Selling loans on the secondary market.
Excellent. Good. You should get this one very quickly. VA loans, unique feature about the payments which are required is...
There may be no down payment.
Boom. So now what's happening, you're starting to recognize keywords.
Yes.
Buyer who wants to take out an FHA loan should refer the buyer directly to...
D. And any approved lending institution such as a bank or savings and loan association.
Good. Oops. Excellent. So you did awesome today. Super happy with you. Super with what you accomplished today. I hope you're happy too. Do you feel like you learned something today?
Yeah, thanks, Joe. You're a great teacher. I really appreciate it.
Thank you. Thank you. You should tell my sister that. She's always criticizing me.
Okay, I will.
Yes. So what did we gain from today? Not only with the lesson about the secondary market, but first, I hope you gained some confidence with this.
I did.
And I want you to think about how you did on those questions. And what's the first thing you said to me? It's recorded, so don't go back on it. When I asked you, what are you having trouble with? What did you say?
The whole question.
Whole thing. And I said,
Yeah.
What do you know about the secondary market? What did you say?
Nothing.
Nothing. And after doing this, I think you realized, hey, I know more than I think I do.
Yeah, I do. And I can certainly make educated guesses. And as you say, I can use some of the keywords and I'll get a certain percentage of them correct.
Good. So just remember, Keep it concise, keep it simple. You'll do great. And this is Joe, PrepAgent.com. And good luck, everybody. Let me know if you have any questions. And leave comments on the bottom of the YouTube page. Okay,
Okay.
bye.
Thanks, Joe.
You're welcome.